Hello, welcome to our channel. Today, we have an extraordinary story to tell you about one of the most influential figures in finance, a man who managed tens of billions and reshaped industries. We're diving into the remarkable journey of Steve Schwarzman's Blackstone and his quest to acquire equity office properties, the largest real estate trust in America, worth over $30 billion in 2017. But first, don't forget to like and share this video. And of course, subscribe to our channel for more videos like this. Before we get to that thrilling part of the story, let's start from the beginning. Steve Schwarzman, the man behind Blackstone, was on a mission to make his private equity firm the biggest in America. He had already achieved a lot, but his empire wouldn't be complete until he acquired equity office properties, a real estate giant boasting over 500 premier offices in major cities across America. To truly understand the significance of this acquisition, we need to delve into the real estate boom in America. Sam Zell, the mastermind behind equity office properties, had built a real estate empire that seemed unbeatable. However, beneath the prosperity of the market, a financial storm was brewing, and Sam Zell knew it.
I don't see how we can avoid it. In other words, it's just, we're dealing with a crisis in the fiat currency world. Ever since Bretton Woods, the whole idea was create stability in the currency markets. And to a large extent, we've done that. And the net effect of which is that we've created, staggering new obligations that are going to have to be paid for in the future. We got to do this till we kill it. Anything that generates discipline benefits the investor. To the extent that discipline disappears, all it did was add more wood to the fire.
Wanting to go into other areas, as long as it was really exciting for the investors, people we could raise money from, and I thought it was just necessary. And we were the only people who wanted to do that. And so we got really lucky. We were good at figuring out what was next.
Steve Schwarzman, known for being risk-averse, surprised everyone by offering to buy equity office properties for $42 a share. This move sent shockwaves through the market, signaling that the company might be undervalued. The stage was set for the biggest real estate deal in history. As expected, more bidders entered the fray, but Sam Zell rejected Blackstone's initial offer. Blackstone returned with a higher bid of $47.50 a share, an offer too enticing to ignore. If the deal went through, Sam Zell stood to make a fortune for shareholders and himself. Sam Zell, a shrewd investor, questioned why Steve Schwarzman would buy real estate assets during the peak of the bubble. Schwarzman had a well-thought-out strategy. He planned to sell different buildings to different buyers, making a profit larger than the entire market value of equity office properties.
We've just had one thing after another, and each one I look at as an individual opportunity. No grand strategy of exactly where we go, but our job was to create new products and great returns with very minimum risk. We had tons of office buildings at the financial crisis, 70% of what we owned. Today in the United States, we only own 2% of that problem area. The rest of what we own is where real estate is really terrific. Warehouses, for example, are about 40% of what we own. They're going up 12 to 14% a year in rents. Hard to imagine that that's a problem, because it isn't. There are other areas in real estate, like data centers, which are literally exploding with growth. Rents are going really high. So what we find in real estate, there are good neighborhoods, in effect, and some really not good ones. And our portfolio is hugely biased to the good areas.
Sam Zell realized that Schwarzman intended to sell at least half of the properties for immediate profits. It was a smart business move, but it would dismantle the legacy Sam Zell had built over a lifetime. Now, he needed to find a different buyer who could outbid Blackstone. The real estate world watched with bated breath as Vornado Realty, one of the biggest players in the industry, shocked everyone by offering $52 a share for equity office properties. They also promised to keep the real estate intact, contrary to Blackstone's plan to break it up. The battle escalated as Schwarzman raised his offer to $52.25 a share, a price that was 24% higher than the market price when the bidding war began. Steve Schwarzman's competitive spirit and conviction were on full display. Sam Zell faced a tough decision. Whoever took over the company would become the biggest real estate conglomerate in the world, consolidating broken real estate, buying failing properties and companies, and returning them to profitability.
As an investor, what you're looking for is stability. You're looking for rate of return. I mean, New York has a terrific track record of producing estate business is it's a very unique business. It's a business full of extraordinary people, risk takers, people who can see around the corner, can plan on something on day one that's going to come to fruition on day 10. Someone who understands that it takes risk to get reward, and someone who can constantly ask the question, am I getting paid for the risk?
With a substantial income from his property management and ownership, Sam Zell decided to pursue law but transitioned into full-time real estate. His parents' risk-averse attitude influenced him to maintain a stable job while pursuing his real estate ventures. Sam Zell's drive to succeed led him to acquire and manage apartment buildings, making a consistent income. He was on a mission to buy more properties and scale his business. To achieve his goal, Sam Zell realized the importance of raising capital and leveraging other people's money. He started raising funds from wealthy investors, including his father, to scale his real estate ventures. One of Sam Zell's significant early purchases was a 99-unit apartment building near the University of Toledo. Recognizing the demand for quality student housing, he revamped the interiors and increased rent, achieving a 20% return within a year. Sam Zell continued buying and managing more apartment buildings, using the income from one to finance the purchase of the next. By the time he graduated from law school, he had already achieved significant success in real estate. Sam Zell's career path was unconventional for a lawyer, but he knew that his real estate ventures were where his true passion lay. His parents' concerns about his academic performance pushed him to prove himself in the world of business. Sam Zell's transformation from a law student to a successful real estate entrepreneur was complete. He had honed his instincts for identifying opportunities and taking calculated risks, setting the stage for his future in real estate. As Sam Zell's career continued to flourish, he founded Equity Group Investments in 1969, laying the groundwork for the creation of equity office properties. Over the years, Sam Zell's fearless approach to business would lead to numerous successful investments and ventures, including equity office properties. With the bidding war between Blackstone and Vornado reaching new heights, Sam Zell faced an agonizing decision: which offer to accept. Would he preserve his legacy by selling to Vornado or cash out big with Blackstone? Sam Zell had spent a lifetime building equity office properties. Its sale would mark the end of an era. The pressure was mounting, and the world watched as he made his final decision. In the end, Sam Zell chose to accept Blackstone's offer of $54 a share, valuing equity office properties at a staggering $39 billion. Steve Schwarzman had won the bidding war, and his strategic vision prevailed. The acquisition of equity office properties by Blackstone marked a significant moment in the world of finance and real estate. It was a deal that showcased the power of strategic thinking and the determination to seize opportunities. Steve Schwarzman, with his unmatched skills in asset management, went on to restructure equity office properties, selling various buildings and assets, and turning a substantial profit. Sam Zell, on the other hand, continued his journey in real estate, with many more successes and challenges to come. His legacy remains a testament to the American dream and the power of entrepreneurship. And there you have it, the incredible story of Steve Schwarzman's Blackstone and the acquisition of equity office properties. It's a tale of ambition, strategy, and the pursuit of success in the world of finance and real estate. Thank you for joining us on this extensive journey, and if you enjoyed this story, don't forget to like and subscribe for more fascinating tales from the world of business and finance. We'll see you next time.